a simple gap trading method that does wonders. A simple gap trading method that does wonders. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-magdi.com. For Fibonacci trading, our website is www.Dayprotraders.com. The title of this video is a simple gap trading method that does wonders. Okay, it's a very simple gap trading method combining the gap trading method with Fibonacci retracements. All right, let's get started. So I'm going to remove first my Fibonacci retracement line on my chart. We are looking at intuitive surgical incorporation. This is an American stock that is listed on the Nasdaq 100. We can see that the stock did gap up on the 21st, here we are, 21st of October 2015. The stock did gap up from here to this point here. So from this point where my cursor is, the stock intuitive surgical incorporation did gap up from this point to this point. Okay, we will draw a line at the point where the price did gap up from to the point when the gap has ended. So this is the first line from where the gap has started to the point where the gap has ended. Okay, so these are the two horizontal lines on the chart. We are on the 50-minute chart, by the way. Okay, the next thing that we will do, we will use a Fibonacci retracement. We will draw the Fibonacci retracement from the starting point of the gap to the ending point of the gap. Here it is, Fibonacci retracement from the starting point of the gap to the ending point of the gap. The next step is to draw two lines. The first line at a 50% Fibonacci retracement level. I'll call out the first line into red. All right. And then we will draw another line at 61.8% Fibonacci retracement level of the gap. Okay, right there. Okay, so we see that the stock gap up from here to here. We are on the 50-minute chart. So the market just opened and the stock gap up from here to here. All right. Now all we do, we draw the first line at the point where the gap has started, the second line at the point where the gap has ended. Next, we use Fibonacci retracement tool and we highlight the 50% and the 61.8% Fibonacci retracement level. If the stock, after gapping up, pull back into the zone of 50% and 61.8% Fibonacci retracement level, and the common trend line along, okay, the bearish progression is broken, we will buy. Very simple gap trading method that does wonders. As you can see here on the 50-minute chart, intuitive surgical incorporation, okay, has gap up, you see, from here to here. We apply this simple trading method by highlighting, okay, the 50% and the 61.8% Fibonacci retracement level. All right. Now, it doesn't mean that the stock will definitely come to that zone, but if the stock, for one reason or another, pull back into the zone of 50% and the 61.8% Fibonacci retracement level, we will draw a common trend line along the pullback, and if the price breaks above the pullback, we will buy. Now, because we're on the 50-minute chart, we can buy straight away if you want to. All right? But if, for instance, we are on the daily chart or a weekly chart, and we see this trading setup, price gapping up from here to here, and then pull back into the zone of 50% and 51.8% Fibonacci retracement level, we draw the common trend line on the daily chart, weekly chart, monthly chart, yearly chart, a higher time frame, and the price close above the common trend line. We will now apply a top-down trading method to trade it. We will not buy straight away. We will use a top-down trading method to trade this particular trading setup. But for instance, if you're on the 5-minute time frame, 3-minute time frame, all right, 50-minute time frame, 10-minute time frame, any time frame between 5-minute to 50-minute time frame, we see a stock that gap out from here to here. We draw the two line and we highlight the 50%, 61.8% Fibonacci retracement level. If the common central line is broken, and the price is in a zone of 50%, 61.8% level, we just buy straight away, placing our stop loss below this low here. But if we are on a higher time frame, daily chart, weekly chart, monthly chart, even on the 4-hour chart or 2-hour chart, even on the hourly chart, we must use a top-down trading method. I'll put a link about a video relating to a top-down trading method in the description section, so check it out. Very simple gap trading method that does wonders, all right? I want to summarize this again to you. A stock gap out, as you can see here, intuitive, surgical incorporation, gap up on the 21st of October 2015 from here to here. We draw the first line at the starting point of the gap, another line at the ending point of the gap, all right? If, doesn't mean that the stock will definitely go into the zone of 50% or 61.8% Fibonacci retracement level. We apply the Fibonacci retracement level to the gap. We highlight the 50% and 61.8% Fibonacci retracement level. If, this is so important for today to understand, if the stock pull back into that zone, it doesn't mean buy straight away, but if the common central line is broken, or any time frame that is lower than the 50-minute time frame, if common central line is broken, we can buy, placing our stop loss here. The risk is quite low, and we can manage this trade, and it is a successful trade in this case. As you can see, as soon as the common central is broken, if one buys here, you can see that the price just went up, If we are on a daily chart or any higher time frame, all right, we shouldn't buy straight away, but we will highlight, we will use this as a trading setup, and then we will apply a top-down trading method. All right? If you like this video, please give us a thumbs up. If you dislike it, please give us the thumbs down. If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. If you watch this video for the first time, it's very important for traders to test it, to use a demo account, to practice before going live. All right? If you have any question, put in the comment section. Any suggestion, put in the comment section. No spamming, please. All right? And if you have, you want us to record a video related to this subject of gap trading and combining gap trading and Fibonacci, put it in the comment section, and in due course, we'll record another video to answer your specific question. If you love our videos, this is the time to subscribe to our channel. Hit the subscription button, before it is too late, all right? We are the TSTW24 traders talking about a simple gap trading or strategy method, that does wonders. Happy trading to you all, and I'll speak to you soon.